Continue.
All right, we're live. Welcome to the Roundup, Hart Investment Group Roundup. What are we? July 23rd, 2021. Here we are, end of July already.
That's it.
Just flying through. It'll be fall before we know it. You know,
I do.
It's crazy.
It is. It is. This is my 16th wedding anniversary today.
I knew that.
We've
I knew
been
that. Happy anniversary again.
Officially been brothers-in-laws for 16 years.
I was at that wedding. It was quite the shindig. The Westin Hotel.
That's right.
I think I remember it fondly because I don't think my brother made it through dinner time. I think
No.
he had to go to bed before dinner. It was quite the spectacle. But we'll save that for story time another day.
That's right. That's right.
You just remembered that right now, didn't you?
I did, yes.
That's pretty funny.
Yeah.
Okay, so let's get her going.
That's it. Let's go.
All right. So let's start off at the huge. What happened this week? Was it busy? Was it like markets wise and in the news? Busy week?
Yeah, I mean, a few things, I guess, in the news we can talk about after, but I'd say market related. We had kind of that first crack in the markets and where we saw the Dow almost down 1,000 points at one point on Monday. I think we reached pretty close to 1,000. So it was kind of the first day of that kind of volatility. But I think more importantly to that is we saw it on big volume as well. So you know, when you look at the signals, you start to say not only what happens from a direction perspective of the market, but you look at what happens underneath it. And so Monday we had a big down day. Volumes were also big. At the same time, the counter to that was bonds had a good day. And so bonds had a good day on up volume. So when we look back through history, you know, we kind of zoom back to where the market lows were last year in March. You know, kind of there was a Friday where we had a giant kind of rally. Market was up 7-8%. And that was the first day where we had a big up move on big volume. So, you know, that's kind of what we saw this week was the inverse of that. So that was a pretty material market reaction that I think signaled that we're in that kind of quad 3 transition where we're seeing growth potentially peaking, which I believe we are. We're seeing growth peaking, and at the same time, kind of the rest of the data through this week as we've seen inflation continue to go up. So, you know, I think we're in kind of, you know, I know we've been talking about quad 4. I think step 1 in this case, which isn't always the case, but presently right now, I think we're seeing growth peaking. So we should expect to see growth decelerate and inflation continue up. So that was a signal at the start of the week. So as a result of that, I needed to make decisions. I'd been hanging on to some of these names, which we talked about, some of the consumer discretionary names like Nordstrom and Under Armour and just trying to think of some of the other names that I'd owned in there, Guess, like some of these consumer discretionary names. Throughout the week this week on some rallies, I did exit those positions.
Yeah, you mentioned the transition phase here. So we do actually go in quite in depth in that in this next week's podcast. So we recorded that the other night. That it should be out on Monday. So if you want to go in real depth, look for that one to come out. I think it's episode 19 with Ben and I. So yeah, that's really what you've been focusing on for sure.
Yeah, for sure. So any of that kind of reflation trade type thing that I had in there, tried to move out of this week. I don't think I'm out of everything because the markets don't go in one direction. You don't make an immediate decision in the same day to reposition everything. It takes a little bit of time, but you know, like Russia, Norway, materials, industrials, like these kinds of things need to be moved out of. And I did some of that work this week. But the question is, what do you move into? which I'm sure people are asking. And what you move into is you move into gold, treasuries, and typically when we look at a historical on crypto, crypto tends to perform quite well in a quad 3 setup as well. So that I think continues to be a positive place to be. Some of the others, I see there's a question there, but some of the other names that that we've talked about, Clorox, to continue, do you think is a good company you want to own? Unilever, I'm not sure if I mentioned that on the call last week. Another name is a name I think you'd want to own right now. The only really new name, I guess, that I added this week was Teladoc. So stock's down about 25% this year. And certainly I think a company that can do well over a multi-year cycle. So that's a new name that I've added on it being beat up already.
Gotcha.
Yeah.
Okay. Yeah, we do have a question, and I didn't mention that, but most people know. If you want a question, we are back on our original platform. So the Q&A button, I believe, is at the bottom. So if you don't see a bar, just hover over it because it does disappear. You'll see Q&A or raise hand if you want to actually talk to us. And you have an active mic and or camera as well. That'll work. Yeah, those are the two best ways to do that. So Malcolm's got a good question here. It's actually one thing we were going to touch on anyway. So what do you make the market recouping all the Monday losses to end the week off at all-time highs?
Yeah, so it's a great question, and I think that's why I tried to kind of hit on the volume piece to it. And so we've seen the move on really low volumes, and so I think the fragility of the market continues to be quite high. So we have volatility still a bit elevated. We have these up moves on, like, yesterday's volume was, I think, day over day minus 25%, month over month minus 20, year over year minus 18%. So volumes were crazy low. Again, today, this was a move again on low volumes. So, I think it's quite fragile with the vol. If the volumes are supporting the move higher, I'd say maybe there's some potential more upside. But I think that it just is a fragile move that signals that I think this market could be running out of steam. Yeah, and so volumes, I think, is the big contributing factor to pay attention to at this point.
Right. How much of time of year to have an effect on volumes? Like, people trade less in the summertime, or no?
Yeah. So summer volumes tend to exacerbate the moves. So, like, you may get big up or down moves in this environment, but when I look at the numbers, why that year over year number can tend to be important as well too, because if you look at last summer and versus this summer, and last summer was a pretty big up move until August. We saw some volatility start to come in August and September last year. So that's why I think it's important to look at all kind of those metrics, 1, 3, 6, and 12 months when you're looking at the comparables. But yeah, volumes historically are thinner in the summer.
Gotcha.
Yep.
Okay, great. Seeing if there's any more here yet. No new questions yet, so we carry on. All right, before we get any more news, why don't we jump in to what you're looking at for next week?
Yeah, so I'm going to continue to look through what how this plays out. I think that the signals that I've seen this week continue to give me confidence that we're heading into this environment. And so, a lot of times when I've talked about things historically, when you're buying something, like I've mentioned gold kind of multiple times this week in my dailies and a little bit last week as well. I've had some questions from people, why isn't it working yet? And so, some of these things, as you enter into positions and you enter these transitions, it takes a little bit of time for it to play out. So I'd be continue to look at that. Gold is kind of a a currency replacement too. So it's something that I'd be comfortable with going up to reasonable size, where you might have 10 or 12% potentially your portfolio just in bullion. So I'd be looking at that. Is there any signals that's telling me that I'm wrong and I need to do something else? But if we continue with these kinds of moves where we have down days, volumes up days, volumes down, if there's a growth surprise somewhere that I don't see, that would say that I'm wrong. And so part of what I've looked at, and which I think we've talked about too, is China was kind of the first country to go into the crisis. Their economy slowed. They ripped coming out of it, right? They peaked about 6 months ago. And now they're in quad 3. And if you look at the China index, whether if you look at KWeb, which is their internet index, like that's down about 60% from their highs. And the Chinese index is down about 40% from their highs. And so, I think they lead the rest of the world by a few months, let's say maybe 4 or 5 months. And so, at some point China is going to come out the other side, but right now they're in the environment that I think the US is going into. And so, lots of things to pay attention to, but those are some of the signals that I'd continue to look at as well. I mean, Japan, which I don't know if I mentioned last week, but Japan kind of signaled that they're going into quad 3 as well. And so we saw some of those signals this week from Japan. And so I'll continue to pay attention to that as they're an important market to the US and the rest of the developed world.
Yep. Gotcha.
Yep.
Okay. Don't think there's any more questions right now. So let's just touch on a couple things here before we wrap it up. I think last week we mentioned that we're coming here a couple weeks ago. We're coming into earnings season. Any big developments out of that?
So nothing super surprising, except for the numbers are probably the most ridiculous we'll ever see from a year-over-year perspective. So you get EPS growth year over year. The S&P right now, something like 300%. Of the 120 or so companies that have reported so far. I think if I told you that number, you just assume that the stocks are way up on that news, but most stocks haven't cared. I mean, Twitter came out with great numbers last night. The stock was up 2% today. If we were in a different environment, they come out with the numbers they did, the stock would have been up 20%. So a lot of positivity is baked into the numbers. The only other thing that you've seen a little bit of is like Kimberly-Clark reported today in their consumer staple, and they talked a lot about input cost rising. And so you're seeing some of these are some of the signals that are telling you that inflation's maybe a little more sticky than I would have thought 3 or 4 months ago. So they're talking about input costs rising, which could result in the actual end user products rising. And if that happens, what happens then is people stop spending as much. If your consumer staples products are going up, they're not going to buy the consumer discretionary things, and they're probably not going to buy some of those other high cost items. So that's the other thing that I've seen that's kind of interesting to pay attention to.
Gotcha. What about crypto? It's been pretty uneventful over the last quite a while, actually. We haven't had much to say about it. We touched on it in the podcast, but what's our view on that?
Yeah, so multiple things. Obviously, time frame's important, but my view is that we saw a lot of leverage come out of the system here when we saw the sell-off about 6 weeks ago. So the actual support kind of line on crypto is quite positive. If you look at kind of the longer term, I think I put out a chart there this week about Ethereum and the amount of users on it. So if you kind of overlay where Ethereum is versus Bitcoin in kind of 2017, you could point to a pretty high number for Ethereum at some point in the next 6 to 8 months. Probably a 4 or 5 times where it is right now. So some of the longer term charts look attractive. And as I say, historically in a quad 3, at least over the last 12 years of back testing, crypto does quite well. But it seems like Ethereum is getting a lot of the attention right now, and a lot of the systems that are being built right now are on Ethereum, and so I continue to follow how that is tracking.
Gotcha.
Yeah.
Okay. Malcolm wanted to know, like, you keep mentioning the quads, right? So this is probably one of the more common questions that we get is there somewhere we can go to get more information about exactly what's in the quads?
Sure.
I was just looking up the Hedgeye website. Is there a specific, is that the best place to go? Because I can drop it in the I can drop it in there. So I'm gonna drop a link in the chat to Hedgeye, and there's all kinds of information on that. If I can find the specific chart.
So the macro show that they have, they do a free 30-day trial, which is probably worthwhile because they send out a lot of the research over that period of time as well. And so, I mean, it's not a crazy new concept. It's just the way that he interprets that makes it interesting. And so Ray Dalio, obviously Bridgewater, the biggest hedge fund in the world. So he kind of, really kind of used this as his building block to his all weather strategy. And then if you look kind of in the late 90s, Credit Suisse came out and gave different context around it. But Keith McCullough, who runs Hedgeye, really kind of made it available for people to understand how things ebb and flow. So it's a matter of kind of 2 inputs, like I think I try to talk about often, is what's happening to GDP and what's happening to inflation. And so within the context of those 2 inputs, you get a different type of scenario and how things play out. I guess anybody can look at that backwards, but the thing that Keith does well is he has built a predictive algorithm based on historical study of data, and with this predictive algorithm, they get something like 165 inputs every day that gives them the view of where they think GDP and inflation are going in every country in the world. So obviously you can go down into the weeds and look at the different countries if you want. But since the US drives a big percentage of what happens in the rest of the world, it plays a major part in that. But I'd say that's probably the best place to look from a starting perspective. And then if you do want to talk about kind of the weeds of it, each of the different quadrants have different asset classes performing better. And so we're kind of constantly looking to see how and where you should look at the different asset classes. So hopefully that answered your question.
Yeah, I put the website in the chat, not in the question and answer, but there's a chat function underneath there. I believe it's on the left-hand side. So you can, like Ben said, you can start there. You can really get down a rabbit hole being on that website for sure. The other one that we recommend all the time too, not for the quadrants, but that we listen to, is Real Vision.
Yeah.
So maybe I'll throw that in there too. But those are the 2 that we promote most. Oh, there's a third that we started promoting as well.
Yeah. So Macro 42 is Darius Dale. And so Darius does a different interpretation of the quads. But the Real Vision one, as I said to Scott, just as we got onto here, so Real Vision was started by a guy by the name of Raoul Pal, and Raoul was a hedge fund manager with Goldman Sachs, and he wanted to kind of provide independent, some of the best independent advice on the street. And so he does, it's tons of content. I was listening to Raoul and Julian Brigden. Julian also writes a macro piece, and they were kind of debating about where we are in the cycle, and they have very differing views. Julian thinks we have a lot of upside still, where Raoul thinks that we head into a more difficult period, kind of aligned with my views. So I always like to see two big macro individuals going at it to understand the thinking and seeing if there's something that I'm missing there.
Mm-hmm. Also, Real Vision probably has the most comprehensive crypto information as well. Mm-hmm. Probably, well, definitely more skewed to pro crypto if you're that, mm-hmm. but gives a lot. They have a lot of people on, mm-hmm. a lot of different guests, and a lot of great information on there too. I think they have like a specific segment now just for crypto too as well. So quite interesting if you're looking to go down the rabbit hole on any of those too. So I've spent many a Saturday and Sunday at Bruce Pitt walking my dog listening to those, let me tell you.
Absolutely, yes.
All right. What else, Ben?
Yeah, I don't think nothing else. I mean, obviously there's other things we can talk about. Bezos went into space. That was probably the biggest billionaire news this week. But yeah, nothing else material.
Yeah. Jeff Bezos' rocket right into space.
That's it. Okay? That's it.
Good for him.
That's it.
To do in retirement.
Exactly. And the Olympics are starting, so that's going to be exciting.
That's right. Lots of good stuff.
Yeah.
Henry says macro42.com doesn't work. Is that not the right email or website?
I think that's the website. I know it depends.
Maybe just Google it, Harry. I'll look it up there too.
Henry, yeah.
Sorry, Henry. Yeah.
Yeah, I know that it is kind of blocked from some internal sources. Like I have to access it from my external research site. So, but yeah, that should be it. It's Darius Dale is his name, Macro42. So that's worth a look. Yeah.
Quick Google will clear that up probably.
Yeah.
Okay. Good. What else? That's it. Big plans for the anniversary dinner tonight?
Yeah.
Did you get in anywhere?
I did. Yeah.
Okay. Good.
Yeah.
Awesome. You don't want to tell everybody because there might be some people just show up. I want to pick your brain during dinner.
Yeah, exactly.
The paparazzi.
That's it.
So, well, enjoy that, and I'm headed out right now to Orleans to baseball.
Okay.
Take a kid to baseball.
Good luck.
So that should be fun.
Good luck.
And just those types of things. So hope everyone enjoys their weekend, and we'll see you next week.
Sounds good. Thanks. Take care.
Okay. Bye, guys.
Bye.